the FedNow program, and that is the federal payments now. It's about instant payments, and it's not like Uber Eats or Food Panda where you get fed right now. So that's what we're talking about today, the FedNow program. What is it? How does it work? And is it a better alternative to what we already have? And that's PayPal, Venmo, Cash App, Apple Pay, and cryptocurrency. The FedNow program will be available in July 2023, and they promise instant 24/7 payments, but that won't necessarily be available to everyone because the service will be available at first for financial institutions, service providers to those financial institutions, and solution providers to end users. So that could be something like Venmo, PayPal, Cash App, but on the more institutional side, because that's where they're leaning. And in a statement by the CFPB director, Rohit Chopra, they warned that services like PayPal, Venmo, Cash App, and Apple Pay are increasingly used as substitutes for a traditional bank or credit union account, but lack the same protections to ensure that funds are safe. So the message that the CFPB, the Consumer Financial Protection Bureau, is trying to send is that these apps aren't FDIC insured, your money might not be safe, and the new alternative for P2P instant payments will be the FedNow program when that fully is available to everybody. And when it first launches, what it's really going to look like is very similar to Zelle, where you have bank-to-bank payments that are instant and anytime. Because what we have now is very limited. It's during business hours, and if you want to transfer money on the weekend, you're going to have to wait for business hours. So the FedNow program aims to be an instant payment solution between banks and people in the near future, but when it launches, it's just going to be between banks. Now, the problem they're trying to solve is that services like PayPal, Cash App, Venmo, Apple Pay, those aren't FDIC insured, so consumers won't be protected in the event that they collapse. Now, the likelihood of them actually collapsing is pretty low, but in another sense, it's that they want the money to move back into banks that are FDIC insured. Now, I do have some concerns, and we're going to talk about that later in this video, but we also have to consider the banking system in the US because a lot of people don't have banks. And the reason a lot of people don't have bank accounts is because there's a lot of out there. There's a lot of fees, there's a lot of requirements that maybe people don't have. Maybe they don't have an ID. Maybe they don't want to provide that documentation. Maybe they don't have easy address to access, which is why there are a lot of check cashing places out there. And there are 3,000 check cashing services as of 2023. I'm going to round up because there's only 2 more. And I was wondering about that, so I had to ask ChatGPT, why do people use check cashing instead of just a bank account, which is free in most cases, but if you don't have enough money, you get charged money for being poor, which sucks. And in some situations, maybe a community doesn't have a bank. Maybe that person has insufficient documentation. Maybe they have a bad banking history, so the bank sees them as high risk and they don't want to work with that person specifically. There could be privacy concerns and then a couple other reasons. But the main point here is that the CFPB, the Consumer Financial Protection Bureau, they have recognized that there are a lot of junk fees, and that just makes it more difficult for a regular person to become banked. According to the FDIC survey, almost 3 in 10 unbanked households in 2021 cited a reason related to fees or a minimum balance. They responded with answers such as, bank account fees are too high, or bank account fees are too unpredictable. And the fees are pretty high because overdraft and non-sufficient fees cost Americans an estimated $15.5 billion in 2019. So the banks are making a killing, and banks might actually make more money if people have to use the FedNow program, as services like Apple Pay, Cash App, Venmo, PayPal close because people won't have those alternatives anymore. So we're seeing that the US government is pushing people away from these fintech financial providers and moving back to traditional banks. We also saw a lot of legislation that was anti-cryptocurrency, which is the infrastructure for instant P2P payments. So that is another thing to concern. I know this channel mainly covers crypto, but I think it's also good to understand other things that may be affecting crypto, like the FedNow program, because cryptocurrency is a direct competitor to this program, and it looks like they don't want any competitors because that's including a lot of popular services that many Americans are already using. Personally, I have a lot of criticisms when it comes to the FedNow program because I wonder, how are they paying for it? How much did it cost to build out this infrastructure? Is it coming from taxpayers? Is it coming from the big banks who will benefit the most from it? Because if you aren't supposed to use other services like Apple Pay, Cash App, Venmo, those financial services, all that money is going to flow back into regular bank accounts, and then the banks have that money and they can use that to make more money. So with those criticisms aside, there will be some immediate benefits to having instant transfers between banks, because as you know, if you have to transfer money, it can take several days, but having it be done instantly at a low cost can be very beneficial. So financial institutions that opt into the FedNow service can take advantage of instant payments. That means you get payments immediately 24/7, 365 days a year. So yeah, instant payments. For example, a DoorDash driver might receive a bank payment instantly upon completing a delivery. So that driver might not have to wait for a minimum payout. They'll be able to get those funds immediately, and then they can spend that if they need to. Because the system we have now with banking, it takes several days for you to get your money. And with instant payments that are cheap and fast, things could change very quickly. Another example, banking customers may also benefit from cheaper fees. According to the Federal Reserve, the expected per transfer fee of the FedNow program would be 4.5 cents, about 5 times cheaper than Venmo, which charges at least 25 cents per instant deposit. Overall, I think the FedNow program is going to provide a lot of value to people in the banking industry. It's still too early to tell how much value it'll actually provide to consumers, to businesses, but we can definitely say that banks are going to win from this because money from these other financial payment apps is going to flow back into the banking system if they want to be a part of the FedNow program. And the CFPB and other federal agencies are saying don't use those services, so they are going to scare people to move their money back into the banking system where banks can win. But let me know what you think. Who do you think is going to benefit the most from the FedNow program? Is it going to be banks? Is it going to be the government? Is it going to be the consumers or small businesses? And we do know who loses, and that's all the competitors. That's cryptocurrency, PayPal, Venmo, Apple Pay. It's just other places where you can hold your money and provide payments. Yeah, all right, that's it. That's what I think about the FedNow program and how it works. If this video was helpful, feel free to hit that like button. And with that, I hope you got your full value for today. Well, that's the PayPal logo. That's the FedNow logo. PayPal logo, FedNow logo.